Introducing Ausbiz Capital GrowWise, a new fund which combines institutional insight and experience with a target return of 15% per annum.
Our fund mirrors SciTech GrowWise, backed by an 18-year track record with historical 21% average annual net return. With more than $1.45 billion under management, the SciTech GrowWise Fund is led by award-winning global portfolio manager Ivan Sherman. The same strategy is now available to Australian investors from as little as $5,000. Discover Ausbiz Capital GrowWise, investing informed by experience.
Hello and welcome to the Global View on this Thursday. I'm Andrew Gagan. Good to have you back with us here at Ausbiz. Let's then check what happened overnight. And the MSCI Global Stock Index hitting a record high. Geopolitical uncertainty has further boosted oil prices and gold following Israel's attack on the Hamas leadership in Qatar and Poland shooting down Russian drones over its territory. US Treasury yields touched their lowest level since April after softer than expected US inflation data boosted hopes for the Federal Reserve to cut interest rates. That also saw the S&P 500 and Nasdaq extend their record highs. Stocks specifically, Oracle shares soared 36% in the biggest one-day percentage gain in more than 30 years. After the tech company pointed to a demand surge from AI firms for its cloud services. The share price appreciation has seen Oracle's co-founder Larry Ellison overtake Elon Musk as the world's richest person. AI-related chip stocks rallied, including Nvidia, Broadcom and Advanced Micro Devices. However, Apple declined, sliding for a fourth straight session. Data center power suppliers rose, including Constellation, Vistra and GE Vernova. Synopsys shares tumbled some 36%, its biggest one-day decline on record after the chip design software provider missed Wall Street estimates for quarterly revenue. Rival Cadence Design Systems also falling. And shares in buy now, pay later lender Klarna Group jumping 30% in their opening trade after a $1.4 billion IPO. At the closing bell, the shares were up around 15%, valuing the Swedish fintech at around $20 billion US dollars. Let's catch up with what's going on at a macro level. US producer prices fell unexpectedly in August, dipping 0.1% after a downwardly revised 0.7% jump in July, surprising economists who are expecting price pressures from tariffs to lift consumer inflation. A decline in the cost of services proved to be the biggest drag, falling 0.2% after rebounding 0.7% in July. Goods prices edged up 0.1% after increasing 0.6% in the prior month. And in the 12 months through to August, the PPI increased 2.6%. Meanwhile, political violence has again erupted in the United States, with right-wing activist Charlie Kirk, an influential ally of President Trump, fatally shot at an event at a Utah university. Elsewhere on the trade front, US President Donald Trump has said his administration is continuing negotiations to address trade barriers with India and that he would reopen talks with Prime Minister Narendra Modi. And the European Union has pushed back on President Trump's demands that it impose crippling tariffs on India and China, the main buyers of Russian oil. Well, the softer than expected read on producer prices has further entrenched market pricing for a rate cut by the Fed next week. The US two-year Treasury yield fell to close to 3.5% in response to the PPI data, but later retraced to 3.54%, while the 10-year fell to 4.03% and a 10-year auction saw strong demand. The US dollar index little changed on the day, while the Aussie has pushed back above 66 cents to be at 66.2 US cents. And Bitcoin is trading higher, currently at 114,000 US dollars. Oil prices have gained further on market concerns about possible supply disruptions after Poland downed Russian drones in its airspace, while a report showing swelling US supplies capped gains. Brent crude futures up 1.7% at $67 a barrel. Copper was up 1%, iron ore falling around 0.5% to $106 a tonne, and gold near its all-time highs, supported by expectations the Fed will cut rates next week. Spot gold at around $3,642 an ounce. Let's get more on markets with a focus on the US. Ira Epstein joining us from Linden Associates. Ira, welcome back. Let's start then with those producer prices. Somewhat of a surprise, weren't they? Given expectations, though, tariffs are going to start feeding in to those prices. Yet to get, of course, consumer prices. But what did you see there?
Well, thanks for having me. I saw a surprise. The last thing I thought was the producer price would actually see a decline. Maybe it wouldn't be up 0.2 or 0.3, but a decline, that took me by surprise. And it came out of the service industry, they're saying, but it also came a bit out of energy too. That was down about 4%, as you saw. So a surprise there. And the biggest event now has to do with what happens with the Fed, because it's not only the PPI surprise, but it is the bad data that we continue to get from the Bureau of Labor Statistics in America about jobs. I mean, under the Biden regime, all he talked about, President Biden, was how many jobs he got. Now, when you see as he left office, that number has been erased, and erased rather dramatically, unless it's somehow reversed in February. I mentioned February because you get a reversal now. In other words, when they're able to come in from the Bureau and make adjustments, and then there's an adjustment in February as well. Will that be worse? Will that be, now we overestimated how many were actually not created. There were more created. I don't know. But what I do know is the Fed has to look at what they have now, since they're data dependent. Somewhere, depending on how you want to calculate it, you've lost 1.2 to 2 million jobs with all these calculations. And that says rate cut, because the Fed isn't worried about inflation. And number two, as you saw in the PPI, it's not there anyways. So the accumulation so far not there. The argument in America that's happening is, should the Fed go 50 basis points at the next meeting, which is a radical shift from where they were at. I don't know. 25, I think, is baked in. 50 is a possibility.
Well, you've certainly got that political pressure too, haven't you, Ira? But nonetheless, the Fed maintaining its independence. But if it were to go 50, what message would that send to markets?
That the data was bad, and that the Fed had bad data, and that's what it made decisions on. It would not be that the economy's in big trouble. So that is probably what they're going to talk about there. The Fed being conservative, my guess is they'll still go 25 and possibly 2 more 25s before the end of the year if we don't get any further revisions, and if inflation doesn't suddenly show up rather staggeringly high. I'm not expecting that to be the case right now. So as I look at it, the stock market stays with a bid. The metal markets stay with a bid, because inflation, as benign as it is, there's still that worry that it's there. And the fact that the Fed will cut interest rates, which I've now baked into my analysis, will put pressure on the dollar, not dramatic pressure, but pressure on the dollar to not rally. You put that all together, I think it's bullish to gold still, bullish to silver, and probably friendly to copper as well.
Ira, let's turn to equities. More records in that session just gone with both the Nasdaq and the S&P 500. Interesting, because that AI narrative cooled somewhat in the wake of earnings. We saw Nvidia come off, but goodness, that session just gone. Oracle's results shooting the lights out. What did you make of that?
Oracle, one word, Oracle. When you see a company like Oracle that missed on earnings and revenue, but they came out and they said that going forward over the next 4 years, they can't possibly meet their demand from their subscribers to rent AI time. That's all I had to see, and that's all the market needed, because that suddenly creates AMDs, NVIDIA up another $6. It creates one after the other, because the market is looking for reasons to show that AI does have a financial wherewithal in the market, and it can create profits for corporations. That's what they're looking for. We know about the spending, but what about now making money? And when Oracle says they can't meet their needs and they're going to spend $35 billion more right away to try to expand what they have, there's a problem, and that's a good problem. And the market took off, and that's why you're knocking on the door of all-time highs again in the stock market.
Is there any risk there, though, that market concentration, is that a concern?
When isn't there risk? Let's start with that. Of course there's risk. And what you'd rather see is a broad-based rally. Today's rally was not broad-based. Today was all about AI stocks, be it the chip makers, the software providers, those that are going to provide rental time on computers. That's what it was about. It was not about the general market today. However, the general market can come alive tomorrow if, and there's a quote around that with a quote, if, end of quote, if CPI does something similar to PPI and doesn't show inflation. That could set this market really off to the upside, and it could be a broad-based rally if that occurred. I'm still looking for where inflation shows up because I don't believe for a second that you're getting the corporations to eat all that. We'd have seen that in PPI. So who's eating some of these price hikes? When I go to the stores, I am not seeing prices down. If anything, living in the United States, you hear about how expensive it is to eat out. A steak, you go to a restaurant, a la carte, it's $60 to $100. So you hear these things. Somebody's eating something from somewhere, in other words, absorbing these costs. They're not all food, obviously, but they are other goods, and I'm not finding the goods that I want to buy any cheaper.
Ira, what are you seeing in the energy market with the focus on oil has moved higher, particularly with those heightened geopolitical concerns? Nonetheless, of course, that comes in the wake of that last meeting of OPEC Plus actually boosting supply.
Well, here's what I viewed. I viewed the move yesterday by President Trump as nothing short of brilliant. He realized that if he goes it alone and decides to sanction Russia, he incurs the wrath of China, who could cut off the magnets again, the raw earths, to the United States. We're already in a fight with India. And the president today made statements, his good friend Modi, and they're in talks. So what he really did is he turned the tables on the Eurozone. And he said to them, you guys figure out what sanctions should be. And the reason is the Eurozone is still buying Russian LNG to the tune of $8 billion a year. Some of the countries in Europe that are affiliated, NATO and the like, they are still buying Russian oil. So the easiest thing for the president and the smartest thing, and I give him credit on that one, was he turned around and said, hey, whatever you guys want to do, you can count on the U.S. to not only back you up, we'll match what you want to do. So 19 drones into Poland overnight. You don't think that's a test of NATO? That is. I think that Putin feels enamored. He feels that he's got strength between China, India, and his winning on the battlefield. So I think that there's a full-fledged test here, and that is not the environment oil goes down on. It keeps that geopolitical bid, and it tries to go higher. So this isn't the time to be necessarily long, but it's certainly not the time that I'd be aggressive on the short side.
Ira, thanks for joining us from Linden Associates.
Thanks for having me.
Let's turn to the local market just ahead of the open. We are expecting to begin lower, as you can see, off around 0.25%. Stay with us, the open is just around the corner.